Good day everyone, hope you're well. Welcome back to my channel. Stay till the end of the video if you want to learn how to catch an entry like this. Today we are going to do crash 300 like you saw at the beginning of the video. There's a few rules we need to follow to catch a trade like this. Alright, so number 1, liquidity sweep. Number 2, market structure shift. Number 3, price needs to be above the 50%. Number 4, we order from a fair value gap or an order block. You target the next level of liquidity. Alright, so let's have a look how I analyzed this market. As we can see, we're clearly in a downtrend, a big impulse move down, and here we're starting to see market structure shift to the upside, where it took this low here, liquidity swept here, market structure shift there, and now we're back on an uptrend. Alright, but it doesn't say that you're in an uptrend you can't catch the spikes. Like, yes, you need to follow the trend. For short-term trades you can go against the trend, you just need to be cautious on where your take profit is going to be. So let's break this down quickly. So number 1, we had our liquidity sweep. Number 2, we had our market structure shift. Number 3, we had our fib level above the 50%. Let's just mark that out quickly. So there's our 50%. Then I'm going to delete this. Now we look for a point of interest, an order block or a fair value gap. Now as you can see, where this impulse move started, this was the last high before the impulse move started. So there's a small fair value gap there. As you can see, it literally touched the fair value gap and it came down. That was your first confirmation. Second confirmation, order block, the last up candle before the down move. As you can see, there's 2 confirmations at once, fair value gap on the 30-minute and an order block on the 30-minute. Now the rules are, you enter either on the fair value gap or the order block. Stops is going to be low this high. Now where are we going to take our TP? Now as you can see, because the trend is starting to shift, for example, here we had a liquidity sweep, we had a market structure shift, here we had a fair value gap. We could have bought, but I don't take any trades in the opposite pair. If I'm trading crash, I only take sells. If I'm trading boom, I'm only taking buys. But if you are one of those traders that likes to trade both directions in these markets, it works exactly the same. Liquidity sweep, market structure shift, impulse move, fib below the 50, enter from a fair value gap, target the next level of liquidity. That will be this one that we created here. Take a sell there. Because this was the last order block that created this impulse move from this entry, my target for this sell would literally be this order block here. And as you can see, this is how we get a sniper entry, a sniper exit. So this is how I analyze the crash and boom markets. It works on all the crash and boom pairs. The principle stays the same. If you like this video, please leave a like and subscribe. And if you have any questions, please give me a comment below. Let's see if I can answer them.